Ripple Labs, the company behind the cryptocurrency XRP, has made a significant announcement. They plan to burn a massive amount of XRP, a move that has sent ripples throughout the crypto world. But what does this mean, and why is it such a big deal? Burning in the cryptocurrency world doesn't involve actual fire. It means permanently removing coins from circulation. Imagine taking a stack of dollar bills and setting them ablaze. They're gone forever. That's essentially what Ripple is doing. But dig with 14.5 billion XRP, this is a huge deal because it directly impacts the supply of XRP. The basic principle of economic supply and demand comes into play here. Reducing the supply of something, especially something as sought after as a cryptocurrency, can potentially increase its value. Ripple's decision to burn such a significant amount of XRP is a strategic move with potentially far-reaching consequences for the cryptocurrency market. It's a bold statement that has captured the attention of investor and enthusiasts alike. Ripple's decision to burn billions of XRP is a calculated move driven by several factors. One of the primary motivations is to influence the price of XRP by making it scarcer. Think of it. Like diamonds, diamonds are considered valuable, partly because they are rare. By reducing the available supply of XRP, Ripple aims to create a similar perception of scarcity, potentially driving up its value. This burning strategy is also intertwined with Ripple's ongoing legal battle with the U.S. Securities and Exchange Commission, or SEC. The SEC has accused Ripple of selling XRP as an unregistered security. While the lawsuit is ongoing, the outcome could have significant implications for XRP's future. By burning a large chunk of XRP, Ripple might be aiming to demonstrate that XRP is not under its direct control and operates more like a decentralized cryptocurrency. This could potentially strengthen their case against the SEC's allegations. The burn can be seen as a strategic maneuver in the legal chess match between Ripple and the SEC. Ripple's approach to managing XRP goes beyond simply burning coins. They are employing a dual strategy that involves both buying and burning XRP. This two-pronged approach is designed to create a balance between market stability and scarcity. On one hand, Ripple periodically buys back XRP from the open market. This buying pressure can help stabilize the ICE price of XRP, preventing drastic fluctuations and creating a more predictable trading environment. It's like a safety net, ensuring that the price doesn't plummet uncontrollably. On the other hand, the burning of XRP introduces the element of scarcity by permanently removing coins from circulation. Ripple aims to increase the value of the remaining XRP. This creates an upward pressure on the price, potentially leading to long-term growth. This buy and burn strategy is a delicate balancing act. It's about finding the sweet spot between controlling volatility and fostering scarcity. It's similar to a central bank managing a nation's currency. But in the decentralized world of cryptocurrency, for XRP investors, Ripple's decision to burn billions of XRP and its ongoing buy and burn strategy present both potential opportunities and risks. On the positive side, the reduced supply of XRP could lead to a price surge if demand for XRP remains constant or increases while the supply dwindles. Basic economics suggests that the price will go up. This is the potential upside that has many investors excited. However, it's crucial to remember that cryptocurrency markets are notoriously volatile. The price of XRP, like any other cryptocurrency, is influenced by a multitude of factors, including market sentiment, regulatory developments, and technological advancements. The outcome of Ripple's legal battle with the SEC is another significant factor that could dramatically impact XRP's price. A favorable outcome could boost investor confidence and drive up the price, while an unfavorable outcome could have the opposite effect. Investing in cryptocurrencies always carries risks, and XRP is no exception. While the burn and the buy and burn strategy might present opportunities for profit, it's essential to approach these investments with caution and a clear understanding of the risks involved. See to the XRP ecosystem, and Ripple's legal battle with the SEC is the concept of escrow. Ripple locked up billions of XRP in escrow accounts as a way to demonstrate transparency and, control over its supply. These escrow accounts release a certain amount of XRP each month, ensuring a gradual and predictable distribution. This mechanism was designed to prevent Ripple from flooding the market with XRP and manipulating its price. However, the SEC has argued that these Escrow XRP still constitute securities because Ripple retains control over their release. This is a key point of contention in the lawsuit. Ripple, on the other hand, argues that the escrow system demonstrates its commitment to a decentralized model. They claim that the predetermined release schedule prevents them from exerting undue influence over the XRP market. The outcome of this legal battle could have significant implications for the future of XRP and the broader cryptocurrency industry. A settlement between Ripple and the SEC could provide much-needed regulatory clarity and potentially pave the way for wider adoption of XRP. The potential for XRP to reach a price of $5.89. While ambitious, is not entirely unfounded. Several factors could contribute to such a significant price surge, including growing institutional interest and mounting political pressure on the SEC. Institutional investors, such as hedge funds and asset management firms, have traditionally been wary of cryptocurrencies. However, that perception is gradually changing as the cryptocurrency market matures and becomes more regulated. Institutional investors are starting to dip their toes into the water. XRP, with its established payment infrastructure and potential for global adoption, is well positioned to attract institutional investment. If large-scale institutional buying were to occur, it could drive up the price of XRP. Significantly adding to the mix is the increasing pressure on the SEC from U.S. Congress members. Some lawmakers are pushing for clearer regulations and a more innovation-friendly approach to cryptocurrencies. This political pressure could potentially lead to a more favorable outcome for Ripple in its legal battle, which could in turn boost XRP's price. The future of XRP is uncertain, but it is undoubtedly at a pivotal point. The outcome of Ripple's legal battle with the SEC, the success of its buy and burn strategy, and the level of institutional adoption will all play a significant role in shaping its destiny. Despite the challenges, XRP remains one of the most prominent cryptocurrencies in the world. It has a well-established payment infrastructure, a growing ecosystem of partnerships, and a dedicated community of supporters. If Ripple can navigate the regulatory landscape successfully and continue to drive adoption, XRP has the potential to become a major player in the global payment system. Its speed, scalability, and low cost make it an attractive alternative to traditional cross-border payment methods. The world of cryptocurrency is constantly evolving. New developments emerge daily, and staying informed is crucial for anyone looking to navigate this exciting but complex landscape. Whether you're a seasoned investor or just starting, it's essential to do your research, understand the risks involved, and approach cryptocurrency investments with a healthy dose of caution. Don't rely solely on headlines or social media hype. Dive deeper, read white papers, follow industry experts, and stay up to date on the latest news and regulations. The cryptocurrency space is full of opportunities, but it's also rife with scams and misinformation. By staying informed, you can make more informed decisions and protect yourself from potential pitfalls. Remember, knowledge is power, especially in the fast-paced world of cryptocurrency.